Hello, everybody. My name's Paul Adams, Sales Director at Pepper Money. And today I'm delighted to be joined by Stephanie Charman, who's the Specialist Lending Relationship Manager at Sesame Bankhall Group. Sesame Bankhall Group, as you know, are significant in the intermediary market with a huge market share through the Sesame Network and through the PMS Mortgage Club. And today I'm going to be posing a few questions to Stephanie. To complement some Pepper Presents series that we're launching very shortly. First one being a spotlight on adverse credit, which has been recorded by Caroline Marakian, and the one that we're referring to and complementing today is the one recorded by Ryan Brailsford, which is really life after COVID and a bit of a spotlight on what we've been through, but what we can expect the other side. So I'm welcome to be joined by Stephanie. Huge amount of experience in intermediary mortgages, made a career out of it, like many of us have. And so I suppose, Stephanie, I wanted to start by asking a question around the challenges that you've seen over the last 3 to 4 months for brokers. But what adjustments have you seen made that have been to great effect? That can lead into top tips for others. What have you seen?
Thank you for inviting me to talk to you today, Paul. I hope you and your family are well. But yeah, it has been unprecedented times, hasn't it? And I think depending on different advisors' businesses, their business models, and their own personal circumstances, I think everybody's faced slightly different challenges in a way. From the advisors that I've spoken to, I think the biggest piece has been implementing parts of a business continuity plan that they never thought they'd have to. I think having worked up business continuity plans before in the past, none of us ever expected to have to implement every single part of it all in one go. And it's been no mean feat, but I think as a market, we've all risen to that challenge and adapted our way of working so quickly. Again, I think the other big piece for advisors has been the move and the change from face-to-face advice to virtual advice, whether that's over the phone or whether it's like we are today, we're using on that online virtual advice piece. Again, this has had to be implemented and adopted really quickly. And I think, it's the support, the guidance, how will, I think it's easy to say, well, I'll just do it this way then, but actually what compliance guidance, what you're doing around data protection, what's a lender's guidance around potentially non-face-to-face advice, and that's been really difficult. I think what I'm hoping is, however, is that we've all found a new way of working that actually will take forward as we emerge back to some sense of normality. I think the other massive challenge has been the tsunami of changes from a lender's perspective. I think initially in those early days of lockdown, lenders were withdrawing products or even withdrawing from the market, sadly, on a daily basis or even an hourly basis. We recognised that here at SBG and did everything we could to support brokers. And we launched our COVID support hub, which I know Pepper worked with us on, trying to make a one central resource area, I suppose, for brokers to go to. So not only could they see lender changes, we were also updating criteria grids with what was the key topic of that moment. And they did change as we went through lockdown. But I think the one area that we can't underestimate, and I think as a market we've all started talking about really openly, is the impact on people's health and well-being. I think there's been so much change at such a fast pace for some people in really unideal circumstances and environments. There hasn't really been much time to stop and reflect. I know I haven't had much time to stop and actually take a breath. So I think definitely as the sun is out, taking some time to just take that break, step away from the laptop, step away from the phone. For everybody's mental health is really important.
Yeah, no, I totally agree. And and many of those learns, I think we've all learned a lot over the last 3 to 4 months. As individuals, as firms, that lender, broker. From a broker's perspective, what do you feel will stick? As in, what are the learns that have been learned and are going to be taken forward into BAU and normality?
Yeah, I think with everything, a balanced approach is always best. I think we were forced into a way of working. And I think when you are forced into one way and you have no other choice, it's easy to think this could be the way of life going forward, and it won't be. I think we'll get a balance definitely going forward. I mean, can you imagine if this had happened 10 years ago and we'd had no Zoom or Microsoft Teams? I definitely think it's made a difference being able to see people. I miss people, so it's been lovely to be able to see people this way. But I think as we start to see, you know, some businesses are returning to the office under social distancing measures, which has cost firms a lot in time and money to implement. I think we'll definitely see it being advisors and principals' personal choice how they work in the future. But I think definitely we've seen the benefits that working from home can offer. I think, again, as I said, what we see today, what we see in the future will depend, I suppose, but hopefully we can hold on to those benefits. But I think the one thing that's been clear is actually customers need support, guidance and advice. So actually maybe the best approach is however the client wants to transact in the future.
Yeah, absolutely. I was going to say that I think we're in a period now where the client determines how they want to be dealt with, you know, whether it be face to face, via Zoom, on the telephone, through email, you know, and I think that the market will be led more from that than anything. So no, that's interesting. And what so in terms of the opportunities in the next 12 months, so Sesame, you know, your mortgage lending, like I said at the start, significant in intermediary, big market share. I know, I mean, even the fact that you know, you have a dedicated role in Sesame for dealing with specialist lenders and keeping those relationships going and keeping us all on our toes, that must mean that the specialist lending share of Sesame's business has also grown, which is good. What do you see the biggest opportunities in the market for the next 12 months that you would advise or recommend, you know, brokers really take note of?
Yeah, so yes, so thank you. Yes, a dedicated role in specialist lending has definitely been there to sort of raise awareness of the opportunities and also work with our lender partners to create those opportunities. I think there's that piece as well. I think the specialist lending market has been probably more impacted and challenged throughout this time. But I'm ever the optimist, and you know, those, you know, we've seen the capital markets start to reopen. So I think that will, you know, that positivity can only continue. That confidence is definitely there. So I think it's baby steps, but those baby steps are definitely growing. I think it's going to be busy. I think is probably what I'd say. But with everything, that brings challenges and opportunities for both advisors and lenders alike. I think the initial speculation about whether the activity that we were starting to see was pent up, whether it was pent up demand or whether it was sustained growth, I think it's perhaps moving more towards sustained growth. I think it is there. We've definitely seen that increase. Our mortgage desk, help desk, is taking more calls on a daily basis now than they were pre-COVID. Wow. So I think the stamp duty holiday will fuel a move towards more purchase activity. But I think we mustn't forget, and before I talk about some of those opportunities, I think one thing we mustn't forget is the product transfer opportunity, both this year and next. There's 184 billion this year. Next big month is October, and there's 250 billion next year. So I think those customers still need help, support, and guidance. Definitely, they've been furloughed. You know, will they? You know, do they know that actually their existing lenders can help them? So I think advisors are well placed to support their customers in that way. I think in regards to purchase, I think we've got the current Help to Buy scheme coming to an end in March next year as well. So those two deadlines potentially make a perfect storm in one way or another. But I think there's some questions around, well, you know, it's taking builders longer to build. They've had that time out. So it's taking builders longer to build. So will properties be ready? You know, I think there's lots of conversations happening there. And we've actually got not just a dedicated specialist lending person, we've got a dedicated new build relationship manager as well. And she's really sort of working with our lenders and our builder partners to make sure our advisors are fully up to date on that. But I think coming back to specialist lending, I think the lines between mainstream and specialists were blurring pre-COVID anyway. And I think that question around what is the definition of specialist lending fits even more now than it did previously. I think there's been lots of commentary around mortgage payment holidays, or actually we put probably what they should have been called, which is mortgage payment deferrals, and the impact that will have on a customer's credit file. I think though we've had confirmation they won't be recorded as missed payments or anything like that on a credit file, I think it'll be interesting to see. There's two strains of thought, I suppose. There's lots of commentary around how much money people have saved while they've been in lockdown. But there's also the other piece around, actually, there's lots of customers who have had to borrow, and some really quite sad and scary stats around, you know, an average adult being quite considerably worse off and worse in debt than they were, you know, coming into lockdown. And that's not just on their mortgages, that's on, you know, personal credit, it's on utility bills. And I think I saw a stat that 4.2 million people have borrowed just to make ends meet during the crisis. So I think those are the customers that really do need help and support as we move forward.
Yeah, and it doesn't surprise me that your help desk has been inundated with calls. I mean, one of the topics that Ryan covers in the webinar that goes along with this series is a change in approach from an underwriting point of view, even with specialist lenders, just to make sure that, you know, in uncertain times, lenders, you know, we need to be even more prudent in the decisions we make, looking at affordability in the short term as well as the long term. And Ryan covers that well, I think, in his webinar, just to try and explain how brokers probably need to think a little bit differently and customers need to think a little bit differently about their situation. And I suppose, you know, this is where all lenders are different. We have a different appetite. We change similar policies, but in lots of different ways. So it doesn't surprise me that, you know, the likes of your desk, and I'm sure some of the criteria hubs that are emerging, which are superb, you know, I mean, I think everyone's done a great job in trying to gather all the changes and display them to brokers just to try and make their life a little bit easy. But I dare say it's helped, but their jobs are still very difficult. But like you say, you know, that's where they're very much needed by the customer, and much more the reason to go and see a broker more than ever before right now. So are there, in your role as a specialist lending relationship manager then, are there any particular customer segments or needs that you think aren't necessarily fulfilled or catered for in the market that's going to arise off the back of this pandemic?
Yeah, I think there's going to be a need for products to be developed, providing solutions for customers. And I think specialist lenders are known for being ahead of the curve when creating new product concepts. I think you're really well placed. I think we're going to need lenders with the ability to manually underwrite a case with that common sense underwriting approach is going to be key. And specialist lenders and building societies are really best placed to do that. I think the one area that there's lots of different areas, and we could talk for hours, I'm sure, Paul. Whether listeners will want to listen, but we could definitely talk for hours. I think self-employed customers are probably going to be the ones that will need real support. They've been really impacted, but some will have been impacted more than others, and some will be able to make that income back more than others. I mean, we've currently got around, I think it's over 5 million self-employed workers in the UK. So how quickly they recover and how lenders consider that will be individual to individual lenders, but will need to be considered. So if a lender's looking at 1 year's accounts currently, self-employed customers' year end finishes, you know, that could be, you know, could actually be quite a good year because they'll see that bounce back. But actually, if they're finishing at the moment, that's perhaps not going to look quite so favourable. So what information can a lender take? What will be their change of stance? What information can they look to obtain from an applicant's accountant? Can they take a plausibility approach? You know, I've used an example of a hairdresser who, you know, hasn't been very busy during lockdown, but gosh, with us ladies, they're busy now. So, you know, they'll make that income back. Yeah. So how will a lender assess that? What will be that underwriting approach going forward? And also, you know, that will transact into later years. You know, this could go, you know, you've got lenders who take an average of a 2-year or a 3-year picture. You know, that customer could be impacted for 3 years off the back of this. And I think that's, you know, that's definitely an area that we need every lender will have their own guidance, but we need some clarity on and some solutions to help those customers. Yeah.
Okay. That's good. My final question really is probably you've been dealing with all the lenders through this period of time, and probably have seen lenders have to adjust very quickly and kind of get themselves up and running, operational on various sites or working from home. What have you been impressed by, I suppose, from a lender's perspective? And what do you want to see more of? As in, what do we need to do more of in the future and do better to support you and your brokers?
Thank you. I think you're right. Lenders have had massive operational challenges. Again, you've had to move everybody to working from home, on top of an influx of calls around the mortgage payment deferrals, and some of the stats that we've seen around how many people have taken those and how many calls you've had to deal with have been, wow. Do you know what I mean? So, fantastic and then obviously changing criteria, changes of pipeline. It's been a real challenge, and I think advisors have been really supportive of that. I think going forward, I think the one thing that's played really well is education, and I think it's not just about education on a product, but it's also education. For me, I think it's education about why. So why is everything the way it is today? And we've seen lenders come out and talk around, in the specialist lending space, for example, we've seen lenders talk about why the capital market's closed. Why does that have an impact on specialist lending and funding and products? And actually, I think though it doesn't change the situation, Paul, it gives some background, it gives some context. Yeah. And I think the more background and context you can have, the more understanding and empathy you can have with the situation. So I think the more that we can do about that as time goes on, and what you talked about with your colleague Ryan, doing webinars on, furlough and income and how that looks. Those are the key things that we need going forward. So we need lenders to be clear about their criteria. We need to be, I always say a quick no is as good as a yes. It's not. Yeah. It's not the same, but actually it's the same difference. Yeah. Yeah. So if you can't do a case, a lender needs to say quite quickly, be clear as you possibly can about your criteria, but also let us know where the greys are. So the greys are great, and the greys are definitely a massive piece of specialist, but we need to know what they are. We need to know the parameters around that, and continue to support, things like we're doing today. Let's keep those lines of dialogue open. That's really, really key. So be as honest and open and transparent with our lenders, as our advisors, as you can be. Advisors need to help support that by giving realistic expectations to customers on timelines. So I think, things are going to take a little bit longer. Be clear with us about that, and then advisors can set those timelines and expectations. So I think that's really important. So I think lines of dialogue and keeping open conversation, I think, is the key piece going forward.
Yeah, no, that's a sensible answer, and I fully agree. And the good news is, we're finding it easier to do that now, through things like the webinars we're doing, through things like this, which are becoming more commonplace now, and people are more comfortable to do it. It's a quicker way of getting your message out, and you can reach further. So hopefully, brokers will listen, and it'll prompt a few thoughts, in terms of their work over the next 12 months and how they plan for their business. So that's been really helpful, and some good tips in there for us as a specialist lender and many of our peers as well. So hopefully we'll be able to rise to that challenge. So Stephanie, that's been really, really useful. Thank you for your views and thoughts and insights, and and continue working as you do with us, giving us so we work together and create the products and the propositions so that we can meet some of these new customer demands that are going to start to appear, I'm sure.
Thank you, Paul.
So Stephanie, thank you very much.
No, thank you, Paul. It's definitely a true partnership. So so thank you. I'm excited about what the next few months will bring.
Good. Keep up the good work.
Definitely. Thank you. Take care.
Bye-bye.
Bye-bye.